Tonight we're diving into a story that sent shockwaves through Wall Street and left even seasoned investors scrambling for answers. The spotlight is on Spruce Biosciences, ticker SPRB, a relatively under-the-radar biotech firm whose stock price didn't just climb, it skyrocketed, more than doubling in value in a matter of hours. This wasn't your run-of-the-mill market fluctuation. It was a dramatic, headline-grabbing surge that had traders, analysts, and everyday investors all asking the same question. What triggered this explosive move? The answer wasn't a buyout rumor or a celebrity endorsement. Instead, it was a genuine scientific breakthrough, a pivotal moment in the company's research that could change the game for patients and investors alike. In the world of biotech, years, sometimes decades, of painstaking research can all come down to a single announcement. For Spruce, this was that rare, career-defining moment when everything changed overnight. The news pointed to a faster, more promising path for bringing a new medicine to market, offering hope to patients and potentially huge rewards for early investors. But before anyone gets swept up in the excitement, it's essential to pause and look beneath the surface. What's really fueling this surge? Is Spruce Biosciences a fundamentally strong company, or is this just another speculative frenzy that could fizzle out as quickly as it began? We'll break down the company's business model, the details behind the breakthrough, and the financials that matter most to see if this leap is built on solid ground, or if it's just a flash in the pan. In the high-stakes world of biotech investing, understanding these sudden moves is crucial. The risks are high, but so are the potential rewards for those who do their homework. So let's take a closer look, dig into the facts, and uncover what's really happening with Spruce Biosciences right now. Because in this story, the real opportunity and the real risk may be just getting started. So, who is Spruce Biosciences? Let's take a closer look at this innovative company and the science behind their mission. Spruce Biosciences is a cutting-edge biotech company dedicated to tackling rare, hormone-related diseases, conditions that often go overlooked in mainstream medicine. Their work isn't about common colds or everyday ailments. Instead, they're focused on some of the most challenging and underserved medical needs. At the heart of their research is tildacerfont, a promising new drug designed specifically for congenital adrenal hyperplasia, or CAH. CAH is a rare genetic disorder that disrupts the body's ability to produce vital hormones, throwing the delicate hormone balance into chaos. For people living with CAH, the body can't make enough cortisol, a hormone essential for stress response, metabolism, and overall health. This deficiency can lead to life-threatening complications and a daily struggle to maintain stability. The current standard of care relies on lifelong, high-dose steroid treatments. While these steroids help manage symptoms, they often come with a heavy burden of side effects, weight gain, bone loss, and increased risk of infections, to name a few. Spruce's tildacerfont is designed to address the root cause of hormone imbalance in CAH, aiming to restore normal hormone levels in a more natural way. If successful, it could reduce or even eliminate the need for those harsh steroids, offering a safer and more effective solution. For patients, this could mean a dramatic improvement in quality of life, less medication, fewer side effects, and a chance to live more freely and fully. Unlike massive pharmaceutical corporations, Spruce is a nimble, focused team. They're a high-stakes player, putting all their resources and expertise behind this single, potentially transformative drug. The company's future hinges on the outcome of tildacerfont's clinical trials and, ultimately, regulatory approval. Every step forward is critical. This makes Spruce a classic biotech gamble, an all-or-nothing bet on a single game-changing therapy that could reshape the landscape for CAH treatment. The stakes are incredibly high, but so is the potential for impact, not just for the company, but for patients and investors alike. That's what makes Spruce Biosciences so compelling: a bold vision, a risky path, and the possibility of changing lives if their science succeeds. The stock's surge traces back to one event: the FDA granted tildacerfont breakthrough therapy designation for children with CAH. For a biotech, this is a golden ticket, reserved for drugs showing early evidence of major improvement over current treatments. It signals the FDA sees real promise and will work closely with Spruce, speeding up the review process. This express lane can shave months or years off development, saving time and money. For investors, it's a huge vote of confidence from regulators. The risk profile shifts. Tildacerfont is no longer just another experimental drug. The market responded instantly, sending the stock soaring. But this doesn't guarantee approval, it just makes the path clearer. The company now has a tangible, government-validated milestone. That's why the news was such a game-changer. The FDA news is great, but let's take a closer look at the financials behind the headlines. While regulatory milestones can spark excitement, the numbers tell a more sobering story. Like most clinical-stage biotechs, Spruce is burning through cash at a rapid pace. Big losses, no revenue coming in, and sky-high research and development expenses. Every quarter, the company spends millions just to keep its drug development engine running. Their only product, tildacerfont, is still in clinical trials, so negative earnings are not just common, they're expected at this stage. There's no approved drug on the market yet to generate sales. Think of it like building a house. Money keeps flowing out for construction materials, labor, and permits, but there's no income until the house is finally finished and sold. For Spruce, that finished house is FDA approval and a product launch. Meanwhile, Spruce's cash reserves are shrinking every quarter. Their financial statements show a steady decline in available funds, raising concerns about how long they can keep going. The big question is whether they can get tildacerfont approved and to market before the money runs out. Timing is everything in biotech, and delays can be costly. Their cash runway is a key metric. It tells us how many months they can operate before needing to raise more funds. For investors, this is a crucial number to watch. The FDA news doesn't magically refill the bank account. Clinical trials remain expensive, and the bills keep coming in. To keep the lights on, Spruce will likely need to raise more money, either by selling additional stock, taking on new debt, or finding a deep-pocketed partner to share the costs. This ongoing financial pressure is a critical risk, even with the breakthrough news. Investors should be aware that good news doesn't erase the underlying cash challenges. Investors must carefully weigh the excitement of scientific progress against the reality of the company's cash burn and the risks that come with it. The headlines may celebrate breakthroughs, but they don't always capture the tough financial reality that companies like Spruce face every day. Here's the core conflict: scientific promise versus financial pressure. Tildacerfont could transform CAH treatment and make Spruce a major player if it succeeds. The rare disease market is lucrative, fueling investor hopes. But the company is racing the clock. Clinical trials are costly, and cash is limited. Any setback, failed trials, delays, or extra data requests could drain resources fast. The breakthrough therapy designation boosts optimism, but doesn't erase financial risk. Investors are betting the science will deliver before the money runs out. It's classic biotech: high risk, high reward. Management must balance rapid scientific progress with careful financial planning. The recent stock surge helps, but the challenge remains: turn a promising drug into a profitable product. Success could mean huge returns. Failure could mean losing it all. That's the reality of biotech investing. The next steps are critical for Spruce's future. When a stock like Spruce soars, it triggers FOMO, fear of missing out. Chasing after a stock that's already spiked is risky. These moves are often volatile. Investing expert Tim Bohan says, "You can't catch every surge, and chasing can lead to losses." The smart move? Study what happened. The catalyst here was clear: a public FDA announcement, not a rumor. Investors who understood the importance of regulatory milestones were ready. The lesson: watch for upcoming catalysts, trial data, FDA decisions, financial updates. Don't focus on what you missed. Look for what's next. The market is full of opportunities if you stay forward-looking. Learn from the surge, but don't let emotion drive your decisions. For investors, Spruce's story is a biotech case study in risk and reward. The sector is volatile. A single headline can double or halve a stock overnight. Only invest what you can afford to lose. There are no guarantees. The upside? If tildacerfont succeeds, early investors could see massive returns. But the stock is now pricier, with optimism already priced in. Do your homework. Check the company's cash runway, trial timelines, and upcoming data releases. Every new milestone could move the stock sharply, up or down. Investing here is a bet on science, management, and execution. The risks: financial strain, trial failures, regulatory hurdles. The reward: a breakthrough drug and big financial gains. Weigh both sides carefully. There's no easy answer. Your risk tolerance and research should guide your decision. Spruce's future is a mix of big opportunities and real risks. The FDA's breakthrough therapy designation gives them a clearer path, but success depends on positive trial results. Partnerships or a buyout are now more likely. Big Pharma loves promising, de-risked assets. A partnership could bring cash and resources. An acquisition could mean a big payday for shareholders. But the biggest risk is clinical failure. If Tilda Kerfont stumbles, the stock could collapse. Financial risk is also real. Trials are expensive and cash is limited. To raise money, Spruce may need to sell more shares, diluting existing investors. Managing cash burn and financing is crucial. The company must balance opportunity with caution. Every step forward increases both the potential and the stakes. Investors need to watch both the science and the balance sheet. Spruce Biosciences is a classic biotech story. High risk, high reward. The FDA's breakthrough therapy designation changed the game, but the journey is far from over. The company still faces no revenue, high expenses, and the ever-present risk of clinical failure. The next big events, clinical trial updates, especially late-stage results in CAH. These will be make-or-break moments for the company and its investors. Positive data could send the stock higher. Negative results could be devastating. The market will be watching every milestone. For now, Spruce is walking a tightrope between promise and peril. The next chapters will decide if this leap was the start of something big or just a brief spike. Stay tuned, the story is still unfolding.